Hello everyone, good morning. First off, sorry guys if I sound a little bit congested. That's because I am. I got a little um I got a little bit worse during the night, so I'm not doing all that well. A little bit drippy, still a little bit sick. So I'm sorry for any weird nose noises. I'll try to keep it at a minimum. Um, But talking about more interesting things, we have finally started a real confirmed downtrend with proper three down moves, very clear moves. Um, it was extremely interesting how we called this uh, during a Discord call yesterday. Um, and essentially targets that I was talking about for a while actually got hit. So pretty happy with the analysis, to be honest. Um, but now this brings us into a very different scenario than what we have been looking into, because now we have to think a little bit more macro and go through anything that can actually be possible support and resistance for the upcoming weeks, actually, maybe not just days, because this move is not only significant, but it also takes us out of this range, because this range was looking pretty similar to a distribution model, a Wyckoff distribution model, with the only difference that generally you would have a sign of weakness happening after the up thrust, which in this case was this move up here. And the sign of weakness happened just after it. Sorry, I'm saying the other way around. The up thrust is what usually happens after the sign of weakness, and it happened after. Um, So this was the only mix-up, but because despite that, it was a pretty, uh, pretty textbook distribution model. So we are clearly in the final phase of the distribution. Number one question is if uh, any of this, um, any of this structure here is going to serve as a support. And I would say probably not. And the main reason for that is because we don't have any clear ranges preceding untested fair value gaps. Okay, what do I mean by that? Is that, for example, we have very minimal gaps like this one, for example, um, which is too small on such time frame to be relevant. Um, and oh, actually, never mind, was already tapped. Um, but this is not the kind of things that you expect um, to be a support that actually changes structure. You know what I mean? Um, so this region, although it has some potential to be support, the problem about it is that uh, almost everything that exists here has been mitigated in some way, shape, or form. Like this gap was already tested when it was moving up. Um, you ha you can say that we have an alpha block here, for example. Uh, by the way, I'm marking these. Okay, never mind. I was gonna say I'm marking these, but maybe I already have them marked. We have a 1 hour alpha block there at 64,470 on MXC. Besides that, I don't see anything, and that is the main issue. Because one could say that this is a an order block, and technically it is. It's the last bearish candle before a change of structure. Um, but I mean, I don't expect a $10,000 drop to stop because of an order block like this. This is essentially more than this is, I don't know, maybe 80% wick, you know. Maybe it will bounce from grabbing liquidity out of these lower wicks here. But overall, I'm not expecting it to be anything that actually changes structure and sends us back to 73K, you know? Um, so if we take a look at a volume profile from the low to the high, we can see that this uh, where I marked the fair value gap, we can see that it's a high volume node, and it's probably essentially more because of the high volume node that it stopped and not the gap itself. And below that, we do have a higher volume node here, but I wouldn't bet on it being a support because this zone is already mitigated. The alpha block itself, one can say that it's not mitigated yet, but again, it's the same logic. I'm not putting too much faith in it. So overall, I guess we can say that it's pretty probable that we are simply going down, okay, and losing these levels. If it happens today or this week, probably, I would say probably not. Just because it's typical for big moves like this to have a little bit of consolidation. Um, and that doesn't mean that we're not able to come to this alpha block already. What I mean is that we clearly have three moves on the 1 hour time frame, three bearish impulsive moves. And generally when this happens, we will see something like an ABC, or maybe three moves up, but in a more corrective pattern. Um, so it might take a while to go and lose these guys. However, what we need to talk about as well is after losing these main pivots, which by the way, let me take the opportunity to mark them because they're kind of big, right? Okay, and this is a daily, this is a daily, and that's it. They're probably all dailies, right? Yeah. Okay. After losing this, the most obvious point that can be support will either be the gaps themselves, and that theory may be supported with other levels. Let's see if we have any. Not really. So yeah, the only interesting weekly level that we have is here, so that takes us to that accumulation down there. As such, this is interesting because it's a daily accumulation, so this range as a whole might be our next support. And that takes us down essentially to the area between 53K and 50,500, something like that, okay? Um, so considering that, let me see one thing. TR pockets, do they take us there? Yes, they do. Okay, what am I essentially doing? I'm essentially doing on the daily time frame the end of this big move that we had, and I'm dragging it down to the correction of it, okay? And I'm using the 272 deviation and the 618 deviation. And that is essentially, well, essentially this is our macro TR pocket, which has an amazing confluence with the accumulation level, right? So 52 700, 51 800, that's a very interesting area to look for a continuation. And if I'm not mistaken, that's also one of the ideas that I had in terms of Elliott wave count. Yeah, exactly. So yeah, I'm pretty biased towards that. But we do have to break these lows in order to think about it anyway. Okay. The thing is, this move is kind of considerable. I'm not expecting us to go this week to 52k, honestly. Like this is a decent reaction, not the most bullish thing in the world. The wick itself is not like super aggressive, super reactive, you know. But it is a considerable one. And this might mean that we range for a while. And on the daily, you can have a different view actually, right? Because on the daily we can say that this is already a discount reaction to the 0.5, for example, and it is a reaction to an area that has a daily fair value gap. This zone over here is a daily fair value gap, along with that 1 hour fair value gap that might either give us again 3 1 hour moves up, and we can even make a new high, a new weekly high, I mean. But it's, in my opinion, it's looking a little bit more bearish than not. I guess that we can also say, I'm trying to input as many views as possible and then try to reach a conclusion. I can also see that we have a possible triangle forming, maybe like this, something like that. And from the top, something like that. Now, if you guys know me, you know that I'm not a big fan of triangles and trend lines. However, I know that a lot of people take note of these, and if they do, they end up being important somehow, because it will mean that swing traders, for example, will use them, and considerable amounts of trades might happen because of that. Okay, so they end up being relevant not essentially because prices moved by geometry, you know, but they become relevant because people act upon it. Let me just adjust this. Okay, so this is also another possibility. For today, I'm interested in seeing an SFP of this low, retest the weekly level, and depending on the reaction, that might be a possible trade. This alpha block is also a point of interest on the 1 hour, although I'll say it again that I'm not putting a lot of trust in it. In terms of continuation trades, be aware that you might not have a direct continuation trade just yet. But that being said, This is a fair value gap on the 1 hour, and the middle of it is something to take into account. The middle is 68,300-ish, and right on the middle you have a breaker block, a 1 hour breaker block. So that area can be resistance and can be a possible continuation trade. However, it's one of those things for us to go there and me to open a short. I'll just follow my typical model, okay? I'll just do the typical final damage M with a divergence on top and a continuation there. Let me just close a trade that I have here. Okay. So that is a possible situation. Probably not for London, I guess. Probably for New York. I'm gonna guess that London is a little bit slow. I'm not sure. No, more things. Okay, this alpha block might become support after that. Oh, this is a weekly order block. I marked it out. Already had there. I'm gonna leave that there. The daily fair value gap is now inverted. Might still be relevant, so I'll leave it there as well. This is fair value gap on the 1 hour. Let me just move this here. And I'll do the liquidation levels with you guys too. Okay, let me just delete some that I don't need anymore. This is a 618 reaction. Just noticed that. Yeah, I'll leave that there. But I'm going to include the 272 and the 0618. 702 doesn't interest me, but the 786 is on the alpha block, so that's interesting. And this one is no longer relevant, did its job. And this one also not relevant because it didn't do its job. So this also did its job. This is our current target, so I'm gonna put it here. Let me call this our macro fib. TR actually. And I don't need the channel anymore as well. Okay. Now, when coming down here, we also essentially cleared all stacked imbalances and TPOs that were there, except one naked point of control, which is my only bias to SFP, the current low, today's low. So So none of these are relevant anymore, but I'll leave the naked point of control there. We do have more confluence back down there, by the way. The 12, this block, for example, has a weekly range POC, and I'm not sure if I care about this naked point of control, probably not, but I'll leave it there. And yeah, this point of control is interesting. It's important to note that probably this block is going to fail just because the CME gap is a little bit below that, which can probably either instead tell us that an SFP of this pivot point might happen with a divergence. Something like we can ignore the block, take that pivot point, and when doing so, have a divergence, change structure here, and maybe come to this guy, and then eventually continue down. I'm thinking that this is way more bearish. If we want, I would say that if we want a shot at making a new high, we would have to at most do an SFP of this, not come down here. If we come down here, it's a lot more bearish and has a lot more potential to clear all of this. So SFPing this low and having a very strong reaction might be good. But more than that, not sure. I would probably not risk it. But this area is interesting anyway. To the top side, all I see is a liquidity curve here. I don't like this pivot as well, so these together form a liquidity curve. In my eyes. Same logic here, stacked highs, or those are easy targets, which in turn takes us to this guy, easy target anyway. And then this area might be a little bit more resistant because it has a point of control. Let me revisit those TRs. Let me check one thing. Where does the TR from here to here take us? Okay, it's interesting. If this is a reaction, if this is a possible reaction, it's interesting because this move down here, if it becomes bullish, this would be the target for sure. 72,800. It's a naked point of control. All of these don't seem like big resistances to me because they seem like easy liquidity curves to grab, and 72 might be the target then. However, it's obvious, right, that this is a range, so always consider the point of control and the very area low of the range. I'm not sure. Don't remember my own. Okay. Is this 70%? Wait. It is, okay. So value area low here, let me mark that. I better zoom in. Value area low. Actually, this seems too little. Okay, that's better. Range value area low, 69,530. Range point of control. $69,770. Range value area high, 7960. Okay. So we will need to range here for a while, create support, considerable support. Maybe take out this low, which is a 1 hour low. I think, let me just check that I set an alert there. Okay, I did, yeah. Take out this low maybe. Let me see where's the 50% of this wick. Oh, we already tapped it, okay. Okay, let's see what happens. But yeah, I would like to see another low get taken for us to create support. We'll see. Probably it's gonna be New York creating a move, not right now. So I wouldn't really bet on it. Unless it creates a new low. I wouldn't really enter a trade right now. So let's see what happens. So two scenarios essentially. And maybe these are the instructions. I'm gonna say maybe because it depends on what happens, okay? Taking out either this low here or this one, having a divergence and changing structure. So doing something like this, changing structure and having a divergence between these guys. And maybe enter long, target at least this guy. When reaching this guy, leave something on the trade, if you want to take a partial, that is. Leave something on the trade because it has the potential to go to 72. And of course your stop would be at break even, right? Second possibility, take out this guy, do it with a divergence, tapping the naked point of control, changing structure, and try to get in. Same logic in terms of TPs. Another scenario would be come to the bearish breaker block and 50% of this 1 hour fair value gap. Same logic, diverge, change structure, try to get in, and in this case it has the potential to be really big, right? A really big move down there. um, because at least the CME gap's bottom might be the target, at least, right? Depending on what happens here on the fair value gap, let's imagine that it just shoots up. You're gonna probably find resistance either on the range value area low or the range point of control. If it breaks both, it's gonna go to 72 because it's that same old logic that if you get like two 30-minute candles inside a range, you are most likely than not to fulfill the entirety of the range. So 79.50 would probably be the target if you get to 30-minute candles inside the range, because that happens pretty it's a pretty common scenario, right? And I think in terms of game plans for today, those are the three possibilities that I'm looking into. Anything different than that, and I would be suspicious, to say the least. So I'm gonna leave the chart like this for now. I'm just gonna update the liquidation levels with you guys, and then I'll join Discord. So we cleared a lot of them to the downside. There's not really anything much more relevant except the ones below. This looks like two. Yeah, okay. There was a duplicate. Which again, this doesn't look too good, does it? Oh, and even worse, we have a poor TPO low at 6,800. Okay, so yeah, I think that's it. Let me just do high block then. And I hope you guys don't mind, but I'm gonna take the opportunity to do the graphic to share on the community. It'll just take a second. Sorry about the inconvenience. Okay, so, but if you wanna take note, as I say them, 65,748 and 64. Oh, it's lagging. 64,406. Also 64,818. I'm not gonna mark this one. Actually gonna only mark the biggest ones. 67,617. 68,387. 69,6610. This might be relevant because it's so separated from the rest. 70,311. And I'm just gonna mark this one as well. 71,702. Delta is pretty bearish, maybe too bearish, so a little bit upside might be due. So let's just do the image to share with the community. This will be fast. I'm sorry for the inconvenience. Don't. almost completely readable, except one or two. Oops, not this one. I'm not sure if that 61818 is 64818 is relevant, but okay, let's leave it there. Okay, let me just share with the guys. And now I'm gonna put them on my chart, and we'll see if we have relevance with other things. Relevance and confluence. So we have medium leverage first. $65, 748, close to the current low. $64,818. Yeah, probably not relevant, that guy. 64,406 on the alpha block. I'm not gonna care about this guy. I'm gonna delete that. To the high. $67,617. That's interesting. I'm gonna put this fair value gap like so. And oops. Did you get duplicated? You did. Okay. And 68,387. 69,610. Oh, this is low leverage. And this is also low leverage. Wait. And I have some 72, 7. This is not relevant anymore. And this is not. This is not. These levels now, they might still be there, but probably on the 7-day heat map only. 69,610, 610, I mean. 60, 70, 70311, 70311. And 717, sorry, 717002. Okay. Okay, that's it. So yeah, essentially we have a liquidation level inviting price to do an SFP of the low. That can be a possible trade to reach at least this 67,617 target as another high block liquidation level. If it just pumps through it, this might be a strong resistance. Okay, if we do a Fibonacci level, and let's imagine that price actually does go to the point of control instead of where it's at now, this puts this whole box in a golden pocket area. Okay, so this can be a pretty strong resistance. Let's see what happens there. Okay, I should also say that generally I do this end of the move to the correction, and that gives us a 618 near a high block liquidation level with an alpha block, and a 618 that has a liquidation level inside a TR pocket. So this area is interesting. One thing that should be said is also that I usually do the high and low of Asia, just like yesterday, which was really nice. Like the high and low of Asia was this, and this was an amazing touch. And the high and low of Asia today, it's pretty massive, right? It's like so. But don't underestimate it. That also gives us a TR pocket on the alpha block, a TR pocket on the liquidation level, and the opposite target is the TPO. So better not underestimate this, because you would be surprised at how many times it respects the TR pocket of the Asia high to low. Happens. It happens. It happens. Okay, so yeah, this basically just gives me more confidence to the scenarios I was talking to you guys. Now we just have to wait and see what types of reactions we get on each level. And that's it. That's essentially it. We just have to wait. This is Asia high to low. Okay. Maybe some TRs are kind of duplicated. No, let me see. Yeah, not exactly. Okay. They all kind of align at the same place. This, by the way, this is a Fibonacci extension from the high to this low to this correction, and the target was pretty amazing, right? This box, this area here, took us down to here, and if it continues, it can take us down to there as a last push. But that generally requires another retrace. I'm just thinking this over, and I mean everything has confluence. To say what is more relevant, more probable, it's pretty uh, it's pretty hard to say what's more probable. I would just decide that based on the reactions we get on these levels. Not gonna try to, yeah, I'm not gonna try to give you guys a specific area. What I can give you ideas, like I can give you ideas in the sense of uh, this alpha block being a possible trade, almost like a swing trade. The only safe low is over there, and this sucks, but it can take you to that TPO POC. That's one idea. Another idea is to react to that liquidation level. I would say that going above this is already bad, so the stop could be maybe there, and this can take you way down, at least to this poor TPO high-low, or in this case it's a low, but it has this one has the potential to reach 52k, right? Also, reaching the TPO, we can maybe clear these, and on the TPO POC, something like this. It's also a possibility. And going lower than the alpha block is kind of dangerous because you have a poor TPO low below you, so either you react to this guy and stop is over there, or it's kind of dangerous. Also another possibility, it's an SFP of the current low without going for the alpha block, but again the stop becomes kind of stupid to have a safe place for the same logic of using the alpha block. So this is just a bad trade unless you get structure confirmations on a lower time frame, and even then it might be a dangerous trade, right? It's counter trend, obviously, so probably not invest as much as you would generally do. Don't risk as much. Maybe if you're used to doing 1%, maybe do 0.5% instead, right? And I guess that's it. Trying to think of other possible situations to mention you guys, but I guess that's it. So I'm gonna clean this up, move it to the liquidation levels. Oh, I didn't. Okay. To finish, let's just take a look at naked VWAPs and see if we have single prints, which we probably do, at least for the move down. Jesus Christ. Okay, I would say that although all of this is a single print on the 1 minute, let's instead take a look at the 30. And by the way, for context, single prints on the 30 minutes are a little bit, TPO in general is a little bit more reliable on the 30 minutes. Oh, this is interesting. Okay, we still have some positive stacked imbalances here. Last one is at 66071. Let me mark that. let me say 7.2. And actually, I need to make a bullish stacked imbalance. Maybe like this. Okay. And this might be a support, and this might also be a support. 75, 310. Okay, which is just below the point of control. Now to the downside. The middle of the single print is 67,890, and the last single print that we have there, close to it, is 67,955. So the single print area is from 67,317 to 68,463. This is one, and the other one is 68589 to 69087. Okay. So what I'm considering is that it can recover most of the stacked imbalances, reaching the middle of the single print and then going down. But also coming here, that at the very beginning of the single print might be a resistance because it has a breaker block on the 1 hour. Remember, we had something like this. So maybe just when it touches the bottom of the single print, it might have difficulties going further up. We'll see. Again, this is all very reactive. I don't think it's a good idea to make predictions based on it. And speaking of that Fibonacci that we were talking about, we can now use a more realistic target, being the stacked imbalance. And for example, the exact beginning of the single print is on the 702. In this case, this area is interesting. I don't like the 618 as much, but it can maybe do something like this. Something. Let's see. More things. Weekly view up. The daily open is way up there. Never mind that, probably. The weekly equilibrium is also in between the single prints. That's also interesting. And previous day value area low is where I'm mentioning. So the 702 has a lot of confluence here. Yeah, this can be a possible short. Something like this. This can be a very possible short, apparently. What is that? Is that a... Oh, we just have this line here. This is a naked view app. We came really close to it. Yeah, I have it marked there. We came really close to it and didn't touch it. Really close. This is the alpha block that I was talking about, right? Yeah. This alpha block does have stacked imbalances supporting it. Let me change to the 30-minute. What I'm watching here, this section here, is these candles here. And I don't need the block, right? So I'm gonna put the last one, which is 64,230. 64230. Yeah, I mean, if we start going down, man, this area has a lot of significance. But if you notice, from this area, which is, we were talking about this weekly order block. Let me activate the single prints here. I actually don't have all of them marked. I have this one, ends at 50. Oh, this is wrong. I should really update this. Oh, it's the lower one, never mind. Okay, so let me update this. 51,51849 to 52,4101. And 52503, 52767, and 52,887, 53,133. Yeah, a lot of single prints there, really stacked up on that weekly order block. Then these are the biggest ones. I changed the Ethereum. Sorry about that. Let me just see if this is correct. No, no it's not. Or is it the next one that I have there? 53,691. 54,243. $54,801. 55,581. And then I'm gonna use this as a whole. So 58,215. Okay, that's what I had. To 57,327. Okay. Let me just see on the 1 minute. I just saw the stacked and balanced now. And this looks like a possible trade, but I would be a little bit afraid, right? It did change structure. Let me see how that's looking on the 1 minute. Okay, so it is diverging. It did change structure. This right here might be a possible trade, guys. If you want to take it, stop would have to be here. Or better yet, to be honest, it has to be here because it wouldn't make sense to retest that order block, I think. Could be a possible trade because it did have a divergence and change structure here. So something like this, right? Technically, it's following the rules. I'm not too convinced because of what I explained. I think it has a very strong chance of coming to do an SFP. But I wouldn't be surprised if it starts going up now. I gotta say, the biggest and apparently strongest, because the stronger the color of the line, the bigger the stacked and balance. The biggest one is pretty much on the middle of the move, right? Pretty much. Which is at around 68 to 60. 68 to 60 is probably the 618. A little bit above. 68 to 60. It's about here. It's the middle of the FVG. Makes sense, right? Can be a possibility. Okay. Guys, I think this is it. I'll say goodbye for now. Probably will be online and streaming tomorrow same time. So far, I hope you guys enjoyed this / took notes, because these levels are going to be important for big trades, probably, okay? Also, don't remember that a lot of times, not always, but a lot of times, Monday is the fake move of the week, and the rest of the week until Thursday is spent doing quite the opposite. If that happens, then we would see a move up, probably to take these highs. I'm not sure. Kind of depends on what it does, right? Also keep in mind that for us to have 3 moves up, they don't have to actually take the high, right? It can be 3 moves up as a retrace. We can do now like something like this, retrace, something like this, retrace, and then something like this just to take out the high and then restart the downtrend, okay? But it's important to take note of the way the moves happen, like for you to count 3 moves down. For you to count 3 moves down, they have to be an impulse in some way. Typically, they are 30-minute FEGs or 1-hour FEGs. A lot of times, vector candles. Okay. Yeah, and by the way, it looks, watching it on the tablet, yeah, seemed sketchy, right? We're probably going down for the naked point of control in that stacked imbalance, or at least take this guy out. Take note of the divergences and change in 1 minute market structure when taking out this guy and or this guy. And that's probably gonna be your long for the day if a long appears today. Okay, we'll see what happens. Okay, man, that's it. I'll see you guys tomorrow. If you guys have any questions, as usual, come to Discord. I'll be there for the rest of the day, probably. Okay. See you soon. Bye bye.